Hey there, it's Will. Sorry I haven't done a video for a bit, but I'm going to do some look at the indices and then some stocks just to give you some ideas. I'm basically just trying to show you what one of the possible methods you can use to trade, or you can even hold stocks for a long period of time, depending on how they're doing. It's not just for day trading or anything like that. So if we look at so I've looked at Russell 2000, NASDAQ, Dow Jones, S&P, and the Toronto Stock Exchange. So some of the basic things is just looking at horizontal lines at the peak, which is what they call resistance, and underneath as support if you see a flat spot. And you can draw trend lines when the stock is going up on the bottoms of the candles, and then when it crosses that trend line is where you might consider selling. So for example, if I draw something like this, and once you cross this sort of line, you could potentially get out. So that's basically all there is to this method of trading. The other things I use is this 8 EMA. So I want to see that it's above the 8 EMA. But when I draw this line here, it's sort of showing that, like, if the stock goes up and starts to flatten, you might be considering moving your money into something else just because it's not doing much. There's going to be short periods potentially of consolidation, but the other thing is when this is going up pretty steeply, it's in gapping here, in between here. There's you usually get some sort of pullback. So here you had a pretty steep rise with gaps, and then you get that pullback. So anyway, right now with the Russell, you can see that we're in a bit of a downtrend here, just in the short term, and we've dropped below this 8 EMA. So I wouldn't be buying, but we have a lower high down here, and so this line here is not specific. Like if I had the line up here, it'd be crossing, so I wouldn't be buying. But if it starts to go up again, you might get this essentially a flattening trend like this. It could come down here, but right now it's not in a good position. You could get it could come down to the 50 and test that, but so yeah, it's not a great spot. It's kind of a flat period right now. NASDAQ, these are all kind of similar. It's a local downtrend, a recent downtrend here. This is a sort of a negative pattern, a reversal. Basically like an evening star pattern, where you have a up candle, a doji type or small candle, and then a down candle that comes down halfway. So this is kind of a negative reversal. This is similar, more severe, with a gap up and then a gap down, and more of a doji type situation. So not a good time to be buying, in my opinion, in terms of getting into that index. Similar situation. You can see here, downtrend below the 8 EMA on the Dow Jones, breaking through this trend line, which is fairly steep, on the uptrend here. But so a lot of times it'll flatten and reverse. It'll pull back and potentially flatten out something more. So now we see today that it actually, in the pre-market, is sort of bounced off the 50. So there could be support at the 50 MA. So you kind of want to see if that's going to happen and start an uptrend again. S&P, same thing, a little bit of a support at the 50 right now, but it's in this little local recent downtrend. So, not a great time to be getting in my opinion. And then the Toronto Stock Exchange, they're all kind of the same thing. We broke this uptrend. We're in a recent downtrend. So none of these look really great. I'm going to talk about a few stocks that I can think of that I've talked about before. So HYLN was originally in this company called, in the stock ticker called Shell, SHLL. Now it's in HYLN. So you can see I had a line here where we broke the uptrend, and for this period of time, it was in a flat consolidation period. And I've got this line showing that that we have lower highs. So we had a high here and then it never made it up to that high again. That's a bad sign. And then once you're down below this 8 EMA, you can see now we're just in this downtrend. So I definitely wouldn't be buying this one. We're in a pretty steep decline here. One thing I was going to mention is if you get in here, like say you break here, you're above the 8 EMA and you ride this up, there's different. So when the stock gets below the 8 EMA, closes down below, you can sell. There's earlier points you could potentially sell. If you want to understand candlestick signals, check out the course that's in the description below. And there's also there's a chat room with lots of daily videos and chats that go on during the day, and you can learn a lot about candlestick trading. There's also a course on entry and exit and sort of managing your trades and stop losses and all that. I'm using TC2000 here. If you want to get a discount, $25 off or a free trial, check out the link in the description below. I love this program. I've got the gold membership, which is for the data plan, US real-time stock information. But let's say that you have this drop, and let's say you get out when it's below the 8 EMA, somewhere around here. If it starts going back up again above the 8 EMA, you don't necessarily want to get right back in again. You can. It's just it saves you the trouble of this type of situation. Like if you get out right when it's below the 8 EMA, you're going to avoid holding during this downtrend here. But just because it comes right back up, you don't necessarily want to get in right away. So there's some things that you can notice is there's these red dots, which are the volatility stops. So kind of when they're red, it's showing that you don't want to necessarily go bullish on these stocks at this point. It'll happen usually after a drop like this. It takes a little bit of time to overcome that negative sentiment. That's one thing you can look at. The other thing is if you look at a momentum indicator like MACD or something, you'll see that we're in this downtrend. We've crossed down below. So right around here, even though we've come back up again, we're seeing this downward momentum, which actually continues the whole way. So there wasn't really an entry point if you look at the momentum MACD type of situation. The other thing is when you're buying, you can look at a recent resistance, a recent high point. If it's somewhat close to the entry point that you're looking at, there's a chance that it won't break that resistance. So you might want to wait until it gets past it. So for example, if I saw it come back up here and I was thinking about getting back in, I would draw a line. I hold down the mouse in TC2000 and I drag it up, depending on where you want to take the top of the candle, 6.8% and 11%. So it's not bad, obviously. But if there's somewhat of a close resistance point, you might not want to buy that. And that goes for moving averages as well. So see if I can find an example. Not on this stock, probably. But if the stock was going up here, and you're near the 50 or the 200 or whatever, if you're just below it, even though it looks really good, it can act as a resistance point. So you'd probably want to wait. So that's another aspect of deciding whether you want to get back in again. So I wouldn't have gotten back in. This one here is, like I said, it looks good. There's a green dot, but you're very close to the high here. And so you might not end up making it. So as you can see, that we didn't quite make that. NAT was another one I was looking at back here. And you can see I have a line which showed the downtrend but that's basically continued. So that's kind of the reason why it's nice to get out when you break a downtrend like this. And even though you see these reversals, you don't really have an established uptrend with these little rebounds here. So you'd want to see rising bottoms, so you want to see higher lows. So you know, you haven't really established anything significant in terms of higher low, and you haven't really broken this downtrend here. So even though you know, some people might see this right here where it came back up and it was green dot and everything, and then you know, the MACD is going up, but you haven't really broken this downtrend yet. That's pretty much all I want to talk about. So I just wanted to, when I do these videos, I'm just trying to explain sort of the basics of, you know, uptrends and downtrends, higher lows, lower highs, using the 8 EMA as an entry or exit point, support resistance here, like with these peaks here. So you can see here, like we had a high point, came back down, and then if you're getting in, you might just suspect that, you know, you may not break past this. And sure enough, you know, we basically didn't get past it, and that created a continuous downtrend here. Yeah, so there you go. If you want to get like I said, a $25 discount or a free trial of this TC2000, check out the link in the description below. I've got the gold data plan, which is the real-time US data, in case you're interested. There's other ones as well for more features, but that's the one I'm using right now. Talk to you guys later.